What is a loan estimate? When you apply for a home loan, you will receive important information that details the costs associated with getting a mortgage. One of the items you will receive when you first apply is called a loan estimate, also known as the LE. Most lenders will send the loan estimate electronically, which means you will need an email address for them to communicate with you. You may be wondering how to read the information on the loan estimate, and in this video, I will share what you need to know about the LE. Hello, my name is Sofia from Revolution Mortgage, and in this video, I will talk about what you need to know about the details of the loan estimate. A loan estimate tells you important details about a mortgage loan you have requested. The LE is a standard document you'll receive when you apply for a mortgage with any lender. It always follows the same format, which makes it simple to read and understand. It includes 3 pages, and lenders are required to send you a copy within 3 days of applying for a mortgage. What is included in a loan estimate? As I said, it is 3 pages long, and it is split into sections which outline the terms, closing costs, and fees associated with your loan. Some of the items you'll find listed on your LE include a summary of your loan details, which include your loan amount, the term of your loan, and your initial monthly payment. Your escrow account information, which includes your prorated annual property tax and homeowner's insurance costs. Your estimated loan closing costs, including your lender fees, your title fees, and whatever third-party costs apply. While it's important to understand all the terms on your loan estimate, there are a few key sections you'll want to pay special attention to. Page 1 of the loan estimate is an overview of your loan terms and costs. You'll want to pay special attention to the date issued, as the LE is only binding to the lender for 10 days after this date. The loan term and type, you want to make sure that these are the terms that you wanted and that all LEs you compare show the same information. The interest rate, you look for the rate, but also pay attention to page 2, which shows you how much you have to pay in the form of points to get that rate. Estimated total monthly payment, this shows you how much you'd pay each month with principal, interest, taxes, and insurance included. Your estimated cash to close, this number shows you how much money you actually need upfront, including your down payment, as well as lender fees and third-party charges. Next, let's look at page 2 of the loan estimate. The second page of your loan estimate breaks down the costs shown on the first page. To better understand your interest rate and fees, you should look at the points, as this shows the dollar amount you have to pay to buy down your interest rate and actually receive the rate shown on page 1. The application and underwriting fees, because all lenders charge different fees to process your loan. Services you can shop for, these are third-party services, and they're not set by your lender, but you're free to shop around for them. Calculating cash to close. This box shows you a breakdown of the cash to close shown on page 1. Finally, let's look at page 3 of the loan estimate. Page 3 of the loan estimate has a few more key numbers, such as in 5 years, shows you how much you will have paid altogether and how much you will have paid off toward the loan balance alone in 5 years. APR. The APR represents your total loan costs over the life of the loan, including interest and upfront costs expressed as an annual percentage. Does a loan estimate mean you're approved? Receiving a loan estimate does not mean you're approved for the mortgage. The LE shows you what the loan terms the lender expects to offer if you decide to move forward. Remember, the loan estimate is issued based on an initial look at your application. You can get an LE after providing your name, your income, the property address of the home you want to purchase or refinance, the property's estimated value or purchase price, your loan amount, and your social security number. At the time a lender sends the loan estimate, they haven't yet seen all the documentation supporting those numbers on your application. In other words, your loan hasn't gone through full underwriting. If anything on your application can't be fully documented, like your income, savings, debt, etc., your loan terms are subject to change. The terms on your loan estimate are also subject to change if there's a major change to your loan. For instance, if you change the term from 30 to 15 years or decide you want an adjustable rate mortgage instead of a fixed rate mortgage. Only after the lender has fully reviewed all your documents will you be officially approved for the loan. Now, how accurate is a loan estimate? Although it's just an estimate, the LE is very often a reasonable approximation of what your loan will cost. How can you get a loan estimate? If you don't have a home picked out yet, a mortgage lender is likely to give you a quote on possible costs. If you do have a home picked out, you can complete a mortgage application and get an official loan estimate within 3 days. Remember to work with your lender to find out the best program, payment, and options for you and your needs. Thanks for watching. If there is anything we can do to help you understand your loan estimate, please do not hesitate to contact us. My name is Sophie, and you can find all my contact information on homeloanswithsophie.com.